Welcome back, everyone. So yesterday, guys, I released a video about CRON, and today I'm releasing part 2. So right now I'm gonna have a link come right up there. It's gonna flash across the top of the screen, and so if you haven't watched the first video, go ahead and watch that one first and then come back to this video, okay? And then secondly, guys, if you haven't done so already, go ahead and subscribe now so you don't miss any updates or stock market analysis. So my job as a content creator, guys, is to give you the best possible information I can. I can't sit at your desktop, I can't sit on your smartphone and trade for you. I don't have the ability to do that. All I can really do is give you my absolute best shot at covering a stock and give you the most responsible answer, okay? So Cronos actually did trade on the Canadian market for about 2 years before it got released on the NASDAQ. Obviously, it hit the NASDAQ here about February of 18, and then it's not only just held its positions, but it's grown quite a bit, okay? The point I was getting at yesterday, though, this is not a fundamentally sound company, okay? The numbers aren't there, okay? And then, like I even mentioned in my video yesterday, guys, I've traded this stock already a couple of times. I've been on the short side of it. I've been on the long side of it. You know, I get a couple percent, I get out. I shorted a couple percent, I get out, okay? I don't consider this company an investment, though, a long-term investment. They got to clean up their balance sheet, okay? Because again, the price is just rising out of speculation, but I do want to be invested in the marijuana industry. I definitely want that in my portfolio. And in today's video, I'm going to show you how I invest into the medical and legalizing of marijuana sector. So I've been investing in medical marijuana for about 2 years now, okay? And what I've done is sometimes I will make short-term trades or swing trades on cannabis and like Canopy Growth, and sometimes, like I said, on CRON and a few others. I might trade when the price action is really hot. What I really try to avoid, though, is those big red days when you're losing 28%. Like yesterday, you know, CRON lost 28%. That's not something I want to see in my portfolio at all. So the way I invest into marijuana, guys, is an ETF right over here, ticker symbol MJ, okay? So this is an alternative harvest ETF, and with a concentration on medical and legal marijuana. And the reason I like this, guys, is I dip by this for long term, okay? So it's up 1.15% today. I'm not interested in buying shares of this today. I did pick up a bundle yesterday. I used my Robinhood account, and I'll deposit cash into it when this ETF takes a big hit. You know, if it's down 5, 10, 15% or whatever, like I said, I deposit money into my Robinhood account, I pick up shares, and I dip buy this stock every time it takes a big hit. I don't buy into the gains, though. I never buy into the gains. So this right here, guys, is why MJ became so compelling to me and why I considered it a great long-term investment. So I have no plans of selling anytime soon, just building positions. Right up here at the top, you got 43% of this company is involved in consumer goods, about 14% non-classified equity. You got 13% basic materials, 11% financials, 11% healthcare, and then you have a little bit of oil and gas and industrials there at the bottom. So the reason I like this portfolio model so much is because it really protects you against the downside risk. This ETF did not take a 28% loss yesterday. You know, some of the medical marijuana stocks got beat down viciously yesterday, and now they're bouncing back up again today. But this is a nice, safe, you know, long-term investment that, like I said, I dip by on days that the marijuana industry is red. And also, right up here, so there's 60% invested in Canadian companies. That's a good thing because, you know, as Canada works towards legalization, that's going to become more and more profitable, and it's going to run a lot harder than anywhere else. You know, United States is working on legalizing it one state at a time. They have a 20% holding United States companies, and then as you can see, they're still pretty well diversified worldwide after that. Right down here, guys, at the bottom too, we have 39 different holdings this company. Now they do charge a 0.79% expense ratio, but you do get a 12 cents per share dividend, so you're also getting a dividend. I don't know one medical marijuana stock that pays a dividend, that's a safe investment like this. Also, your dividend frequency you get every quarter, so that's good. Now let's jump over and take a look at all the different holdings this company has. So this is the reason I invested into this ETF. At the end of the day, these top 10 holdings is the reason I invested, guys. It's because I know there's going to be a lot of winners in here. I know a lot of these companies, especially down here like GW Pharmaceuticals, they already are a very well developed company and already have a very strong market cap. But there's also going to be some of these companies that will fail, and I don't want to feel the burn too hard if we have to sell out of a position and move into something else. So you can see here, guys, that this ETF gives you a lot of exposure to all these different marijuana companies, and some of the best, like Canopy, CRON, Aurora, GW Pharmaceuticals, and several others that it keeps this ETF very balanced. And like I said, it really protects against that downside fall. Okay, and you can look at this like it's a long-term investment instead of just trading in and out of stocks. If I'm just going to sit behind a computer and trade all day, give me CRON, give me Canopy Growth, and give me, I'll take those 15, 20, 30% gains all day long. But for my long-term investment, this is where my money comes right here. So this ETF, guys, it's only been on the market for a little less than 3 years. It came out in 2015. And you can see, it's not taking the explosion some of these companies are, but then again, like I said, not taking the dips, not taking the big hits like some of these other companies are. So, right in here, when this stock dips down, buy. And then when it comes up real high, you might want to sell out. I don't. I just wait for it to dip again and I buy more, okay? And every time this stock dips or every time this ETF dips, I'm adding shares to my position. As you can see, it's a very stable in comparison. I don't even have a problem if you want to trade this. If you just want to get a quick 5% return on anything, you could definitely trade this stock and get pretty consistent 5 to 10% returns. So keep that in mind too. It's a lot safer. You're invested in the sector, guys, and you get exposure to all kinds of different companies while getting paid a dividend. It's just a win-win. All right, guys, so if you don't feel confident in your trading abilities, you want to take the easy route, do it like I do. Just pick up shares of MJ on the dip, and it pretty much takes care of itself from there. I hope you enjoyed this video, guys. Drop me a like. Don't forget to subscribe and leave me some comments down there, guys. Let me know what you think. Thank you for watching my video again, and have a great day.